Welcome to the Captain's Blog. I am David McDonough, Senior Vice President at Trilogy Financial. On this blog, we try to take what's unnecessarily complicated out there on Wall Street, make it understandable to you out there on Main Street. The positivity continues in the face of tariff threats, GDP, the Fed, earnings this week. The market up 8% for the year, 1.5% for the week, 2.5% for the month of July. Did that positivity continue? Or is the market too high? Did profit taking ensue? Here's your week in review. We started the week with a deal with the EU where it comes to tariffs. But remember, August 1st, today, the exemptions went away. But let's start with some economic news. GDP, gross domestic product, measures the strength of the economy, higher than expectations. But all eyes are on the Fed this week and the feud that they're having with the president. The president wants them to lower interest rates. The Fed is staring in the face of that and saying no. That happened on Wednesday. Chair Powell said that he fears more of the inflation side of the market and not the labor side of the market. But for the first time in years, 2 out of the 9 Fed governors dissented and thought that rate cuts should happen now. Again, I've said this the last 3 or 4 weeks, that we do expect rate cuts to happen in September. And lastly, earnings. We've talked about this repeatedly. That's why you buy individual positions, and that's why you're in the stock market for growth. The Mag 7, David, maybe you can help those folks out there figure out what the Mag 7 is, came out with exceptional earnings this week. But jobs numbers just came out this morning on Friday, lower than expectations. So yes, folks, profit taking did ensue. And if you're out there in Flagship Nation, you knew that, and you rebalanced accordingly. As of this morning, the market is down 1% for the week, but again, still up 7% for the year. Here's what to look for next week. Now, we don't invest on slogans, the sell in May and go away crowd, but I do know this with 30 years of experience in this industry, August is typically a bad month for performance for a couple of reasons. Fundamentals, earnings releases, they've already happened. Where it comes to the volatility in the market, it goes higher because some folks take the month off, but the captain will be at the helm. Be prepared for that. Be prepared for the headline risk, the tweets busting on copper this week, pharmaceuticals. Will take some of these industries down. Look for value out there in the market and do not chase. Consult your local financial advisor for more details. Now, here's your personal finance tip of the week. I continue to mention the Fed interest rate cuts. Now, against those headlines that you're seeing, it doesn't affect mortgages, but it does affect credit card interest rates, equity lines tied to prime, and also CD rates. Now, we recommended over and over again that your short-term money gets out of this market into high-yielding cash accounts and CDs. It makes sense, in our opinion, to lock in those rates now before the September rate cut that we believe will happen. And a big thank you out there. We had a record number of referrals this week. Pass the blog on. And again, have them consult your local financial advisor for more details. So thanks again for checking in. We'll see you next week on the Captain's Blog.